So my name is Erik Voorhees. I'm the CEO and founder of ShapeShift, which is a digital asset exchange.
My name is John. I'm the COO of ShapeShift, I've been involved with it since the beginning.
So basically, I was setting up the company and was trying to figure out where we would base it, and spoke with a lawyer. Mainly wanted to just be somewhere outside of the U.S. because this was a few years ago, and we didn't know how the U.S. was going to end up treating crypto. It's turned out better than I thought it would, but at the time, I didn't want to base it in the U.S. So the lawyer I was working with advised me that there are a few good jurisdictions, Switzerland and especially Zug being one of them, both for regulatory reasons, but also for the tax rate in Zug. So yeah, since we're an international business, it made a lot of sense to base there. The big issue this year has been these ICOs and these token sales. And so many crypto companies have started forming in Switzerland that I think the Swiss financial regulators are looking a lot more closely at it now. So maybe they will change things within the near future, just because there's so many companies. I think there's like 100 crypto companies just based in Zug at this point.
It's got a lot more attention, and some of them have raised very large sums of money at a very early stage. And so this just draws a lot of attention to everything and a bit more scrutiny than we would like.
Most attractive to crypto companies is when a regulator just allows things to move forward without trying to put it into a box early on. Because the best way to kill an idea or a concept or a new form of business is to try to categorize it as something else. And New York, for example, did this with crypto. Came out with this bit license. They were very, proactive, which no one wanted. And now New York has totally exiled most of the important crypto companies. Fortunately, Switzerland has not done that, and so I'm hoping that that'll remain the case.
Yeah, it depends on what they're trying to do. Like, there's a lot of different potential use cases, and I wouldn't, you want to look into it and make sure that it's right for you. And it's not necessarily like the cheapest place to set up. There's certainly a lot of costs to even just get everything set up and the administration. But it can be a very good place depending on what your use case is. In general, we think it's a very interesting thing, and that it is something that's not going to go away and is a kind of new form of, raising funds for ideas and businesses that we think is very useful already and will become more useful. We think in this early stage, some of them have been done probably less responsibly than they should have, and that there needs to kind of be, more just responsibility around them, preferably self-policed by the companies themselves. And as we begin to see that develop, we're certainly supportive of it. ShapeShift trades a lot of the tokens that these sales create. So for us, it's a very important part of our business that other people are doing it and to help foster good sales, basically. We definitely want to see good sales happen.
The concept that anyone now can raise essentially any amount of money with just an idea is really cool. It also means people can raise any amount of money with a bad idea. Yeah, it basically lowers the barrier to capital raising, with all the good and bad that comes along with that, inevitably. First half of the year was ICOs. Second half is the Bitcoin price.
So it's double whammy.
And they're both important. Yeah, it's hard to say that one's more important than the other, and I think they're actually very related. I think the ICOs brought a lot more attention to the space, and that attention to the space basically brought Bitcoin back to the forefront. And that's part of the reason you're seeing the price rise the way it has. It's always the $1 million question.
Yeah, and every time people ask me this, I'm always wrong about it. I think a year from now, somewhere between $20,000 and $40,000 per Bitcoin.
Wow. Okay.
I think you could see as high as $50,000 to $100,000 by next year.
The genesis was just understanding that digital assets were going to become a bigger and bigger thing, and this was 3.5 years ago when it was not obvious to most people yet. Bitcoin was really the only digital asset of any significant size. but that seemed inevitable that you have many different digital assets. Some cryptocurrencies used, as forms of payment, but many assets that are not forms of payment or money at all. And so that digitization of finance was really the impetus for building ShapeShift, allowing any human or machine to convert one asset into another as easily as possible was the goal.
The company has grown tremendously fast. I think we've grown far more than something like 1,000% in growth rate year over year, every year we've existed. So it's just been an incredible ride so far, and in this last year has been probably the strongest amount of growth we've ever seen. In terms of just scaling the actual technology behind the company and scaling the human side, the human capital of the company, that's been our biggest challenge. And we've seen our company go from, just, a few people in a room, not much more than a year ago, to now being, a small, not just a startup anymore, but a small company with, more than 60 employees and distributed all over the world, various departments, tech, support, marketing, all these various things. So it's been crazy to see that amount of growth so fast.
We put together a Series A in the early spring this year. We closed it in March. So Lakestar and Early Bird were both the lead investors in that, and they've been fantastic to work with. They I think are sitting well now because they timed it perfectly.
Yeah.
Right around when I probably pitched to 120 different VCs, and most of them were not interested because they didn't believe in the narrative of crypto as an industry growing, because they saw the price and it wasn't at all-time highs, so that's like all they cared about. Early Bird and Lakestar did a really good job of actually assessing our business and realizing that there was a lot of potential that would become obvious. And within a month of them investing in us, we became profitable, and the whole year has been a huge rally in the entire market. And now all the VCs that a year ago were not understanding this stuff and not believing in it are calling us, asking if they can get involved, but it's a little too late.
They're a little too late. Yeah, Early Bird and Lakestar took a chance when no one else was really willing to, and I think it's worked out very well for us, and it's worked out very well for them.
Yeah, it's key.
Ideally, ShapeShift becomes the largest digital asset exchange in the world. That's a tall order because there's a lot of big ones now, but that's the goal that we're working toward.
Yeah, and to just keep making it easy for people to convert between digital assets and letting this proliferate and letting other machines and partners plug into us. Our biggest source of volume has been other applications that actually plug into our API. A year ago, probably less than a third of our traffic was coming from these type of partners. Now it's probably more than 2/3. So it's been a tremendous growth on that, and just continuing to foster that ecosystem. Yeah, there's a number of them. The most common are what we call multi-asset wallets. So the various wallet softwares, kind of before ShapeShift, there wasn't really a way in the crypto space to monetize a wallet. You could kind of spend a lot of time and effort and take a lot of risk creating these wallet softwares, but there wasn't really any revenue to be had because you were just letting people send funds and there wasn't anything coming back to you. ShapeShift introduced an actual revenue model by letting them plug in ShapeShift and sharing our revenue with them. And it's allowed some of these wallets to grow into very significant companies.
Yeah, basically the wallets allow exchange functionality within the wallet itself. So user never has to visit an exchange website.
Gotcha.
And in the software that they're using with their wallet, they can do the conversions right there.
Yeah.
And that makes it super easy for the user and also provides a revenue stream for that vendor. We just split the revenue on what we make. So we send 25 basis points on all the volume to the company that runs the service.
Okay. And overall, you guys, I guess, same model, right? You take a percentage on the transactions, and it's as simple as that.
Correct.
Yeah.
One of ShapeShift's original theses that was even different among other crypto companies was this idea that there's going to be a plethora of types of digital assets and that people will want to exchange between them. When we first started doing this, Bitcoin was really the only big digital asset, and no one really cared about anything else. And so even other people in the Bitcoin space were like, you guys are crazy, this doesn't really make any sense, we don't see any use in this. In the last year especially, that thinking has dramatically changed as there's been a rise in other types of digital assets. They've risen in price, they've risen in value, and all sorts of different use cases beyond just money and financial services. Things like solar power, things like Ethereum, which is you're paying to use a distributed computer to run applications upon, or privacy, or any other number of potential use cases, or distributed. Yeah, and of course the CryptoKitties in the last week, which is essentially like a cute form of crypto Pokemon, more or less, that people are trading these things that can actually digitally breed with each other, and you can sell the kitties to other people.
The blockchains let people prove digital scarcity. So there's a whole host of different use cases people can find for that. CryptoKitties is a great example. It's funny, but when you know that there's only so many of something, and that thing is useful or entertaining in some way, immediately a market price can get established.
Yeah.
And then you can have all sorts of interesting capital markets form around these different tokens. And so all that experimentation is really just getting started. The shift is currently happening. And the shift is essentially that finance is moving from a foundation based on fiat currencies and banks, which it's been for 100 years, to digital finance, meaning assets that are completely digital, that have nothing to do with banks and not even anything to do with fiat currencies. So both the currency and the infrastructure layer are completely new. And this, I think, changes how all of finance can work. Value can now move anywhere in the world instantly at near zero cost. And just like when the internet came out and information could move freely like that, it changed how people interact with each other in many ways. And crypto is really just that phenomenon continuing on with finance.
Yeah, and to just kind of add on to that, when the internet kind of came about and revolutionized all these various types of businesses and really our world around us, even our consciousness in a way, it left kind of the finance world mostly untouched because it couldn't reach in the same way. There was too much ingrained traditions and various things in the finance world that were too difficult for the internet to change.
Right.
And crypto has kind of come about, and cryptocurrency and digital assets are changing that in that same way. So to the point where I think we're going to look back 10 years from now and it's going to be so obvious that this needed to happen, but you just couldn't see it ahead of time, just like it wasn't obvious that the internet needed to happen.
The great example to prove this point is if you want to send like an international payment, it'll take several days. And all that's happening is a digital signal is going from one bank to another. Why does it take several days? It shouldn't. And it's actually faster in some cases to take cash and strap it to an anvil and mail the anvil to that other country. That can sometimes get money there faster than an actual bank transfer. That's completely absurd. And so with crypto now, none of that happens anymore.
Yeah, it's incredible. I remember just being blown away that it took time for my bank to transfer money to the Visa card or anything else. And
it's not like they're shipping cash.
No.
Yeah.
It's just a signal, but it doesn't, for whatever reason, it doesn't work. And instead of asking the banks to innovate, I think the crypto industry is just doing it for them.
Well, and it reminds me, people keep asking about when's the Uber moment in banking, and to me that's kind of the one that's already happened, right? Just like Uber made taxi drivers suddenly have to stand up and pay attention to customers or realize that there was more to be done with the taxi cab than what they've been doing. You realize also with banks now that, hang on, we've not been doing what we should have, we haven't been adding value, we haven't been innovating. And
Totally.
It's been fantastic for that.
Incumbents need competition. They don't have it. They don't have much impetus to innovate. They can just kind of sit on their heels, and that's what I think the banking industry has done for a long time. And crypto's really kind of pushing that now, and it's forcing them to, sit up and pay attention that they actually need to change things a little bit, that they can't just sit back.
So I guess a closing message from our visitors from the U.S. is that the bankers of Switzerland should pay attention to the crypto valley and to what's going on with all things crypto, right?
Yeah, the theme here is that all of finance is going to become natively digital. And anything that prevents value from moving anywhere is going to become redundant and useless. So that, as a mindset, has to feature into anyone that works in finance. They need to understand that theme because it's going to play out over the next 10 or 20 years.